Namaskar dosto. Zomato profitable high. Lekin Swiggy IPO abhi aaya high. Asli winner kaun hai? Data kya kahta hai? I Dektain, the finance engineer Kusaf.
Let's go back to 2014. While Zomato was just a website for menus, Swiggy changed the game with its own delivery fleet. By 2018, Swiggy was the undisputed king of Indian streets. They had more funding, more riders, and a higher valuation, but they made one critical mistake. They focused only on growth, while Zomato started focusing on survival and efficiency. This was the beginning of the great flip. In 2022, Deepinder Goyal made a bet that almost destroyed Zomato. He bought a struggling Grofers for nearly $600 million and rebranded it as Blinkit. The market hated it. The stock crashed to 40 rupees. But look at the data now. Blinkit is growing at 120% year-on-year. It has effectively turned Zomato from a food app into a logistics giant. Swiggy's Instamart, once the leader, is now playing catch-up. Financials don't lie. For the last 4 quarters, Zomato has been EBITDA positive. They have cracked the code of making money from a 200 rupee biryani. On the other hand, Swiggy is still losing thousands of crores every year. They are burning cash to maintain market share, while Zomato is printing money. In the stock market, profit is the only language that matters, which is why Zomato's market cap is soaring. Let's look at the average order value or AOV. Zomato users are spending more per order on average compared to Swiggy. This is because Zomato has successfully captured the premium tier of the Indian middle class. Their loyalty program, Zomato Gold, has over 5 million members who order more frequently. Swiggy One is struggling to match that level of customer stickiness. The real war isn't food anymore. It's quick commerce. By 2030, the 10-minute delivery market is expected to be larger than food delivery itself. Blinkit has higher, dark store density than Instamart in top metros like Delhi and Mumbai. This means faster deliveries and lower costs. Zomato's infrastructure is now a massive moat that Swiggy will find very expensive to replicate. With the Swiggy IPO, investors are asking, why is Zomato valued at twice the price? The answer is execution. Zomato's management has proven they can turn a loss-making business into a profit machine. Swiggy still has to prove this to the public markets. Until Swiggy shows a path to clear profitability, it will continue to trade at a massive discount to Zomato. If we compare them to global giants like DoorDash or Meituan, Zomato's margins are actually becoming some of the best in the world. India is a tough market with low ticket sizes. Yet Zomato is thriving. This shows that the finance engineering behind the scenes is working. They have optimized everything from rider payouts to restaurant commissions. But it's not all smooth sailing. Both companies face risks from government regulations on gig worker benefits and the rise of ONDC. If ONDC scales up, it could disrupt the high commissions these apps charge. However, Zomato's massive logistics network gives it a plan B that Swiggy is still building. So, what is the final verdict? If you want to invest in the future of Indian consumption, Zomato is currently the gold standard. It has the growth of a tech company and the discipline of a mature business. Swiggy is for the brave, those who believe in a turnaround story. For now, the data says, Zomato is the king. If you enjoyed this 5-minute deep dive, subscribe to the Finance Engineer. Data bolega, market sunega. Thank you.